This week, the crypto market took a noticeable step back from last week's intense greed, as traders and investors alike paused to reassess their positions and strategies. The mood has shifted to one of careful observation and measured optimism, with participants keeping a close eye on both price action and broader economic signals. The Crypto Fear and Greed Index now sits at a neutral 51, signaling a pause from euphoria but no real fear. This level suggests that the market is neither overbought nor oversold, but rather in a state of equilibrium. Investors are digesting recent gains, taking time to reflect on what's driving the market, and focusing more on long-term fundamentals over short-term hype. Many are rebalancing portfolios and seeking out projects with real-world utility. ETF inflows remain strong, anchoring the market and drawing in both institutional and retail capital. This steady stream of investment is providing a sense of stability, even as prices fluctuate. Anticipation of a U.S. Federal Reserve rate cut is adding to the optimism, making risk assets like crypto more attractive. Lower rates could mean more liquidity and a friendlier environment for growth assets. The market is in a phase of consolidation, with participants closely watching regulatory moves and the pace of real-world adoption. News about compliance and new blockchain partnerships is being weighed carefully. This neutrality isn't weakness, it's the market gathering strength for its next move. Like athletes preparing for a big event, traders are waiting for the right moment to act. The story this week is one of transition, from chasing price to understanding the deeper forces shaping the future of crypto. It's a time for patience, strategy, and looking beyond the headlines to what's truly driving innovation in the space. Bitcoin is holding strong near $116,000, defying skeptics and capturing the attention of both Wall Street and Main Street investors. The digital asset's resilience is on full display, as it continues to set new benchmarks in the financial world. This momentum is being fueled by the overwhelming success of spot Bitcoin ETFs, which have quickly become a game-changer for the market. The excitement is palpable, with traders and analysts alike closely tracking every move. Adding to the bullish sentiment, the hope of a Federal Reserve rate cut is prompting investors to position themselves for a potentially explosive Q4. The macro environment is aligning in Bitcoin's favor, drawing in new capital from all corners. U.S. spot Bitcoin ETFs saw a record $2.9 billion in inflows this week alone, the largest weekly inflow since July. This surge highlights the growing appetite for regulated Bitcoin exposure among both retail and institutional investors. Total ETF assets now exceed a staggering $151 billion, with over 1.3 million BTC under management. This represents a significant portion of the total Bitcoin supply, underscoring the scale of institutional involvement. This relentless institutional demand is creating persistent buying pressure, establishing a strong price floor and making it increasingly difficult for bears to push prices lower. In the past month alone, ETF providers have purchased over 22,000 BTC, while miners have only produced about 14,000. This imbalance is creating a classic supply squeeze, where demand far outpaces new supply. On some days, the demand-to-supply ratio has soared to nearly 9-to-1, a level rarely seen in any asset class. This extreme imbalance is putting upward pressure on prices and intensifying the bullish narrative. Corporate treasuries are now joining the fray. Metaplanet, for example, has raised $1.44 billion specifically to buy more Bitcoin, signaling a new wave of institutional adoption beyond just ETFs. Meanwhile, Binance remains the top exchange for whale transactions, with major players executing large trades and keeping liquidity flowing. The presence of these whales is a testament to the market's depth and maturity. From ETFs to corporate balance sheets, institutional adoption is building a durable foundation for Bitcoin's continued rise. The landscape is shifting, with more companies and funds recognizing Bitcoin's strategic value. The ongoing supply shock from ETF accumulation could drive significant price appreciation in the coming months. As available, Bitcoin becomes increasingly scarce. Bitcoin's legitimacy as a macro asset is now recognized by traditional finance, with major institutions and asset managers treating it as a core portfolio holding. The ETF effect is reshaping the entire market structure, ushering in a new era for Bitcoin and setting the stage for what could be its most transformative chapter yet. XRP is making headlines, holding steady at $3.01, a price point that's capturing the attention of both seasoned investors and newcomers alike. This stability comes after years of volatility and uncertainty, signaling a new era for the digital asset. Once the subject of intense legal drama and regulatory scrutiny, XRP is now shifting its narrative toward institutional adoption and mainstream acceptance. The courtroom battles that once defined its story are giving way to boardroom discussions and strategic partnerships. The upcoming launch of XRP futures on the CME Group marks a major milestone, giving institutions a regulated way to trade and hedge XRP. This move is expected to bring greater liquidity and transparency, making XRP more accessible to large-scale investors and financial firms. With this development, XRP joins the ranks of Bitcoin and Ethereum, which already have established futures markets. This puts XRP in the same league as these leading cryptocurrencies for institutional products, further legitimizing its role in the digital asset ecosystem. Grayscale's new multi-crypto ETF, now including XRP, signals growing regulatory acceptance and opens the door for a wider range of investment vehicles. This inclusion is a strong indicator that major players are recognizing XRP's potential and stability. Asset manager Rex Osprey is already planning a US spot XRP ETF, which could unlock a wave of new capital and attract both institutional and retail investors. If approved, this ETF would make it even easier for investors to gain exposure to XRP through traditional financial channels. In South Korea, XRP remains a top-traded asset, with strong grassroots support and consistently high trading volumes. The enthusiasm from retail traders in Asia continues to fuel demand and keep XRP at the forefront of crypto conversations. The combination of Asian enthusiasm and Western institutional adoption is creating a powerful global network effect. This synergy is helping XRP bridge markets and connect investors across continents, accelerating its integration into the worldwide financial system. XRP's transformation from courtroom controversy to financial mainstream is nearly complete. The asset's journey has been marked by resilience, adaptability, and a growing sense of legitimacy in the eyes of both regulators and investors. The asset's focus on cross-border payments continues to resonate with investors worldwide, offering a fast, cost-effective solution for international transactions and remittances. Institutional and retail interest are converging, driving XRP's next chapter. This convergence is fostering innovation, new products, and a more robust ecosystem for the digital asset. The future looks bright for XRP as it cements its place in the global financial system, poised to play a pivotal role in the next wave of digital finance and cross-border commerce. Binance Coin, BNB, has surged past $1,000, a milestone driven by the strength of the Binance ecosystem. BNB's value is tied to Binance's dominance. Its trading volumes now surpass all other centralized exchanges combined. BNB is essential for trading fee discounts, launchpads, and as gas for the BNB chain, fueling constant demand. Regular token burns reduce supply, creating deflationary pressure and supporting price growth. Despite regulatory hurdles, including new European rules and ongoing legal challenges, investor confidence in Binance remains high. BNB's rise is a testament to the power of platform utility and strategic tokenomics. The coin's deflationary model and exchange dominance set it apart in the crypto landscape. BNB's performance shows that strong fundamentals can overcome regulatory headwinds. Dogecoin has made history with the launch of the first US Dogecoin ETF, transforming from meme to mainstream. The ETF gives traditional investors easy access to Doge, bridging meme culture and Wall Street. Dogecoin's popularity and community have become its utility, proving that cultural relevance can drive financial legitimacy. The ETF launch comes as retail interest in meme coins surges again, creating a feedback loop of institutional and retail demand. Dogecoin's story shows that in crypto, narrative and community can be as powerful as technology. The ETF could mark the start of a new era for culture coins. For now, Doge has proven it's more than just a joke. The US may finally be on the verge of clear crypto regulation with the Digital Asset Market Clarity Act moving through Congress. The bill aims to end the SEC-CFTC turf war by defining which agency regulates which assets. Industry leaders see this as a crucial step toward ending years of regulatory uncertainty. The act would establish clear tests to classify crypto as securities or commodities, providing a path for projects to mature and innovate. If passed, it could unlock investment and innovation, making the US more competitive globally. Investors would gain protection and clarity, while companies could plan and build with confidence. The bipartisan support for this bill offers real hope for constructive regulation. The US crypto industry is ready to move from confrontation to clarity. While Bitcoin and XRP grabbed headlines, altcoins like Ethereum, Solana, and Cardano made quiet progress. Ethereum saw $360 million in ETF inflows, showing strong institutional confidence despite minor price dips. Solana is pushing toward $250 with new CME futures options boosting its status among top assets. Cardano continues its steady, research-driven growth, appealing to long-term investors. The stablecoin sector is shifting, with Solana's USDG gaining traction and Tether facing regulatory scrutiny. Binance's halt of USDT trading in Europe highlights the growing importance of compliance and transparency. The altcoin and stablecoin landscapes are evolving fast, driven by both innovation and regulation. The next phase will reward projects with real utility and strong governance. Crypto adoption is moving beyond trading, with payroll emerging as a key trend, especially among Gen Z workers. More employees in digital industries want to be paid in crypto, seeing it as efficient and global. Companies are exploring crypto payroll to attract talent, but regulatory uncertainty remains a major hurdle. Clearer laws, like those being debated in the US, are critical for mainstream adoption. In the Middle East, partnerships with Google Pay and Ant International are building next-gen payment rails, laying groundwork for future crypto integration. Crypto is moving from speculation to real-world utility, powering global payments and salaries. The shift from asset to utility is the industry's most bullish long-term signal. Crypto is becoming part of the global economic machinery. This week showcased crypto's evolution from wild speculation to structural growth and institutional integration. ETF inflows, regulatory progress, and real-world adoption are now the main drivers of value. Bitcoin's ETF-driven supply squeeze, XRP's institutional embrace, and BNB's ecosystem dominance all highlight this new era. Even Dogecoin's ETF debut shows the market's expanding definition of value. The Digital Asset Market Clarity Act could finally provide the rules the industry needs to thrive. Crypto is moving from niche to mainstream, from trading screens to paychecks. The key players now include asset managers, corporations, and regulators. The foundation for the next generation of finance is being built right now.